The Fibonacci retracement is a good predictive indicator. It gives you the level that price may react and bounce off. And many of you already know how to use the Fibonacci retracement tool. But many of you do not know how to combine it with Fibonacci extension and market structure to find high probability trading setups. Using a Fibonacci retracement tool blindly and expecting price to bounce off the levels isn't going to work. If you had success doing that, then please reach out to me, because I've been trading for more than 15 years and I haven't seen anyone find success just using the Fibonacci retracement tool in isolation. This video will show you how you can combine the Fibonacci retracement tool and extension with market structure. Now, if you follow along and do this right, then getting a good reward to risk of 1:3 is definitely achievable, as I will show you later. Towards the end of the video, I will also show you a little trick to combine both Fibonacci retracement and extension into a single tool, so you don't have to draw them separately. So make sure to stick around till the end. If you are new to trading and do not have a good understanding of how Fibonacci retracement and extension works, don't worry, because I will cover that as well. This video is meant to be an ultimate guide, so don't worry, I got you covered. So before I jump straight into how the Fibonacci works and how you should draw it, really appreciate if you could hit that thumbs up button and subscribe to the channel. It helps support the channel so that we can keep producing high quality educational videos like this. We also do a giveaway worth $37 for each new video we upload. And if you wish to participate in our giveaway, then look for an emoji somewhere in this video. You can also find the full instructions in the pinned comments down below. So let's talk about the Fibonacci retracement tool. The typical Fibonacci retracement consists of the following levels. These levels are predicted to act as support and resistance where price might actually bounce. If you want to be buying, you need to connect the Fibonacci retracement tool from swing low to swing high. Conversely, if you want to be selling, then you need to connect the Fibonacci retracement tool from the swing high to swing low. Let me show you another example. Here, the market is in a clear uptrend, so we want to be buying the dips. So we take the Fibonacci retracement tool and use this swing low here. Drag it to the swing high here, and we have our Fibonacci levels where price may potentially retrace to. So typically, traders trade off these projected levels. And while there's nothing wrong with that, you can drastically increase your win rate by combining it with Fibonacci extension and market structure. So let's quickly go through the Fibonacci extension, because I want to spend more time on how to combine everything. Unlike the Fibonacci retracement, which only has 2 points, the Fibonacci extension has 3 points. And I see a lot of traders use it wrongly because they place the third point wrongly. So please pay close attention and keep watching. The first 2 points are exactly identical to the Fibonacci retracement. To project resistance, you want to connect the swing low to the swing high. And of course, if you want to project support, then you want to connect the swing high to the swing low. Now what about the last point? Well, the last point should go to the same level as the first point. This way, you are projecting the levels based on the length of the swing low and high. I see many traders connect the third point to other places and use it wrongly. So please remember that the first point and the third point is the same. A quick hack is to open up the settings and copy and paste the first point's level to the third point. This is the most precise and accurate way to do it. Now, most traders use these Fibonacci extensions for their target take profits. So if they were to enter somewhere here, they might set in their take profit target at the 1.272 or 1.618 projection level. That's one of the most common ways to use it, and that's all cool and good. But as promised, I want to show you how to combine this with Fibonacci retracement and market structure so that you can get the highest probability setups. So to do this, you need to understand that price typically corrects in a 3-wave price structure. It looks something like this. This doesn't always happen, but it happens frequently enough, and this is what we need to see. The first thing we're going to need is a Fibonacci retracement. So in this chart, we're going to connect the swing low to swing high since it's a clear uptrend and we want to buy. And rather than randomly choosing which Fibonacci level is more likely to hold, we watch for a 3-wave price structure. When we see price breaking the first wave's low, we can use the Fibonacci extension tool to project where price is likely to turn. This is how we combine the Fibonacci retracement tool with the extension tool. The Fibonacci retracement tells us where the buyers are likely to be interested in buying, and the extension tool tells us where the sellers who have sold at the high here are potentially looking to take profit. So by combining the two, what we get is a zone of confluence where the sellers are exiting their positions with a profit and buyers are stepping in to get into the existing trend. You can mark out the zone using a rectangular tool like this, and this zone is a very strong zone which has a very high probability of supporting price. Of course, the price may not get to that level, but it is the highest probability level that you can get in at. Now, not forgetting the final thing to watch out for, which is market structure. You want to look at the previous market structure and see if the zone that you drew coincides with it. If it does, that makes the level even stronger because historically, that level has already proven to be valid support or resistance. And this is the entire process of how you combine Fibonacci retracement, Fibonacci extension, and market structure. Now, a word of caution that the Fibonacci retracement is a retracement tool. This means that there must be a trend in order for there to be a retracement. So please avoid using this in a ranging market. It will not work. Let me show you another example before ending off this video with the trick to modify your Fibonacci retracement tool into a Fibonacci extension as well. So right here, price is clearly trending down, so we want to look for selling opportunities. So we grab the Fibonacci retracement tool and connect it from swing high to swing low. If you struggle to find the swing high and low, I have a quick tip for you. Switch your candlestick chart into the line chart and you should be able to identify it easily. So once we have the Fibonacci retracement in place, we need to draw a Fibonacci extension. And that only happens when price makes a 3-wave price structure and breaks the high here. When we see this, we use the Fibonacci extension tool and connect the swing low to swing high and back to the swing low. Again, remember that the last point of the Fibonacci extension goes to the same level as the first point. Based on the Fibonacci extension and retracement, we can plot out the zone of resistance with the highest probability of working out. Do a quick check that this zone of resistance coincides with the higher market structure. If we were to look here, we do see that this zone was indeed a strong level in the past. So this further enhances the odds of this zone holding as resistance. So in this case, we can see that price eventually retraces to the level and bounces off the level. Now, I won't go into the entry details in this video, but if that's something you need help with, then I will leave a link to my top 3 entry indicators at the top right corner and at the end screen of this video. You can use any of these indicators to enter or keep it simple with a price action candlestick pattern. Moving on, here's how you can modify your Fibonacci retracement tool so that it functions as a Fibonacci extension tool as well. This would mean that you don't need to do the extra step of using a Fibonacci extension tool while avoiding the issue of drawing it wrongly. So, open up your Fibonacci retracement tool and input the following levels: minus 0.272, minus 0.618, 1.272 and 1.618. Once you put in those levels, your Fibonacci retracement tool will automatically plot out the Fibonacci extension levels. Whether you draw or connect it from the swing low to swing high in a bullish case, or from swing high to swing low in a bearish case, the levels will be plotted. This is why we use the negative sign as well. If you do a check with the Fibonacci extension tool, you will notice that the levels are the same as well. So, by modifying your Fibonacci tool in this manner, you can now skip the step of drawing a Fibonacci extension instead. When you determine the high probability zone, you will use two Fibonacci retracement tools instead, rather than a Fibonacci retracement and Fibonacci extension tool. And that's it for this video. I hope you learned something new. Make sure to hit the subscribe button. I will leave a link to the video on the top 3 NG triggers here, so do check that video out next. Thanks for watching.